Assalamu Alaikum everyone, welcome back to another video. I hope you're having a wonderful day. So in today's video I am going to show you guys 3 companies that I will be buying next week. As you know, I'm always a net buyer of stocks. I'm always buying stocks every single week. My plan is to max my ISA account again this year. Just to give you an update for those who are new to the channel, and now there's so many people that have joined the channel recently, so thank you very much for joining the community. So yeah, what I've done so far is this account that you see right now is actual money. Okay, so that's over £100,000 of my own money. I've started this portfolio May 2020. Since then I've maxed my ISA account. For those who are not living in the UK, the ISA account is tax haven, tax sheltered kind of accounts where the government gives us allowance of £20,000 to invest, and they will not tax any of the capital gains as well as any of the dividends. And what I've done is I took opportunity of that situation, because I've realized how often do you get these kind of opportunities from the government. So 3 years in a row I've actually maxed that account, and right now we are very close, 95% maxed. So I've only got less than £1,000 to invest in before the 5th. So this time next week, okay, I should be maxing this account, inshallah. That's the plan. Now I use my own salary, so I save every single month, and towards the beginning of the year I've always buy here and there, whatever, but towards the end of the ISA, so towards in the last 3-4 months, I've actually been buying a lot more. I wish I actually didn't do that, because I wish I spent more on the early like the beginning of the year, rather than basically in 2023 I'm talking about, rather than now, because everything else is expensive right now. But there are opportunities still. So, and this is what I want to do today. I'm going to show you the 3 companies that I want to add to, inshallah. So I own all 3 companies in this portfolio, and I'm going to show you exactly what I'm going to do with them. And as always, if you like this type of content, you enjoying what we're doing here, you enjoy transparency, just like the videos, that's the least you could do, and subscribe to the channel, of course. And if you have not joined us in the Patreon account and you are able to, please do so, because it costs you about 50p per day, and you get access to the Discord where a lot of the brothers are sharing good practices, all the buys and sells they make, and all the buys and sells that I'm making, as well as all the dividend trackers, Sharia compliant investor ebooks. You can ask questions, of course, get like-minded brothers and sisters who actually are investing in the stock market. Right, just a couple of more things. The fear index, when it comes to fear and greed index, we checked it I think about 2 weeks ago. It was about in mid 60s, and right now we're back again to the 70 somethings. So again, we are basically hovering around the grid right now, so we'll see what happens. Okay, I am expecting by the end of June, July, whatever, some sort of a correction. It might happen. If it happens, it will be a perfect opportunity for new investors and old investors. It doesn't matter. It gives us an opportunity, because like we always said, I was reading, in fact, Millionaire Teacher book today. I've read this book before, and this is one of the reasons I actually started investing. And one of the things that we basically was talking about is just that it changes your mindset when you read these books, that you think about these companies that we own. They're actually real companies. They're not some sort of a ticker symbol that you just trade in and out of. This is a real business, and you're actually a shareholder in a business. And what you're doing is you're actually putting a lot of money into some of these companies, so you have to know what you're buying, and and you have your own goals. And if your own goals are, for example, in the next 5 years, 10 years, 20 years to be financially independent, whatever that means to you, then you need to have that blueprint. You need to have that written down somewhere and know exactly what your plan is. And inshallah, you're going to execute it. Don't worry about what's happening in the market, where it's going up or down. That's what I'm trying to do here. It's quite difficult because you get tempted to do this and that, but majority of the time is I'm trying to do what is good for me and what I want to do, inshallah, in the long run. And if I can achieve that financial freedom whenever that happens, alhamdulillah, that will be absolutely wonderful. So anyway, I'm going to continue doing that. I'm going to continue dollar cost averaging into the companies that I own in this portfolio, and of course I will always share that with you guys. Right, let's have a look at the first company, and that's Medtronic. Medtronic is one of the companies that's down quite a bit. So year to date is actually flat, has not done anything. For the 1 year, it's actually down about 4%. So it's actually not basically done at anything at all. It's been hovering around between 70 to 85 in the last few months. And as you can see here, Quant is actually saying it's a strong buy, Wall Street is saying it's a buy, and Seeking Alpha is saying it's a buy. So I just want to give you a little bit overview of the company, and then I'll show you what basically these companies, what Wall Street is saying in terms of valuation side of things. But just to give you an overview, as you can see, it has a 3.3 dividend yield, 110 billion market cap. This is one of the the biggest when it comes to healthcare equipment side of things. It has a safe dividend. Currently the payout ratio is only 52%. They haven't increased it much, but the last 5 years about 8%, which is really good. 10%, and the last 10 years about 13%. Okay, 45 years of increasing that dividend, you get $2.75 in terms of dividend side of things, and it looks cheap right now. The 5-year average for this company dividend yield side of things is 2.3. Right now it's 3.3, which is basically tells me it's actually quite cheap. And the forward PE used to be about 18, right now is about 15. So again, that because of that, it seems cheap enough. And there are quite a few other metrics. So for example, the payout ratio is fine, the free cash flow is absolutely fine. In terms of earnings per share, it's been choppy here and there, but it's actually heading the right direction right now. And then they have been buying back their shares in the last few years, although they have increased it. Sometimes these pharmaceutical companies, or anything to do with the pharma side of things, or healthcare companies, they do acquire other smaller businesses. Sometimes they use their basically shares to actually buy those companies. So that could be the reason why this is basically gone up and down. Total sales is actually been fine in the last couple of years. It's actually gone slightly higher than where it was this time last year. Return on equity is about 8%, return on invested capital about 8%, operating margin about 19%, free cash flow margin of 15%. Again, I'm not saying go away and buy this company. Okay, as you can see, some of the financials do not look great, but I'm taking that bet, inshallah. So 1.72 in terms of basically we were looking for anything below 3. So it's absolutely fine from that side of things. And if we look at the Morningstar, as you can see, 4-star stock right now, 26% discounted, $112 per share, and the company has a narrow economic mode. So overall, I really like the company, and it's been in my portfolio for quite some time. And just quickly show you the expected earnings growth for the next couple of years. Okay, next year is about 5%, and then after that about 4%. If we go back to Seeking Alpha earnings, you will see it's more or less the same. Okay, 5%, 7%, 8%, another 8%, 15% in 2029. I don't know how true that is, but again, 4%, 5%, and this is what you expect from this type of companies anyway. And looking at the ratings from Wall Street, as you can see here, we've got 10 buys, 10 strong buys, 6 buys, 15 hold, and 2 strong sells. And right now it's about 15%, 13%, 14% upside from where we are right now. $94 per share is where they think the price should be. The next one I'm going to add to is Public Storage. This is one of the REITs that I own in the portfolio. As you can see here, it's all buys from all the systems in here, and looking at for the year to date is actually down about 8%. For 1 year is down about 2%, and it has a fund from operations of about 16% right now. So let's have a look at a bit more detail of this company. As you can see here, as almost a 50 billion market cap, 4% over 4% dividend yield, and 96% safety. This is one of my favorite REITs. Okay, remember REITs basically pay about 90% of their basic net income as a dividends, but this one is about 83, so which is absolutely not bad at all. 8% increase in the last 5 years, 10% in the last 20 years, and as you can see, just 1 year, so $12 of dividend that you receive every single share of this company that you own. And it looks undervalued, so maybe undervalued at the moment. So normally it's about 3.44, right now it's 4.3. And as you can see here, when it comes to this ratio here, public funds from operation side of things, you can see here it's about 19, and the real estate, basically the rest of the REITs is about, the sector basically is about 13.7. So in terms of, remember we said 90% is basically what we expect. In terms of the payout ratio side of things, is about 82 right now here. And then looking at adjusted FFO per share, it's actually heading the right direction. Free cash flow per share is also heading the right direction, although we're not using that. And shares outstanding has actually stayed the same in the last 4 or 5 years. and total sales from $2.23 billion to right now $4.5 billion. Return on equity 21%, and return on invested capital 12%. Operating margin was of 51%, and free cash flow margin of 66%, which we normally don't use anyway. And when it comes to the debt, net debt to EBITDA is actually almost non-existent, which is quite nice. Now looking at Morningstar, 3 stars right now, fairly valued. $310 per share is where they think the price should be. Right now it's $278. Let's call it $280 per share, which is basically nice. Looking at the earnings side of things, so estimates for the next couple of years, so you can see here it's about 4% there, another 4%, 5%, 7%, and so on. And then same goes for the revenue side of things. To be honest, I don't expect anything higher than that, which is basically from this type of companies. So basically collect your dividends, as well as, of course, you get your price appreciation. Not much, but you get your price appreciation as well. And the final company I want to talk about today is AstraZeneca. This is one of the UK-based companies. A year to date is actually down about 1.6%. And for the 1 year, just less than 0.5%. Current PE is just about 16. As you can see, an analyst is actually saying is a buy. Wall Street is also saying a buy. So let's have a look at the financials of this company. Over 200 billion market cap. Dividends is safe. 2.14% dividend yield. The payout ratio only 40%. 1 year increase. So I wouldn't trust this because of the other website, UK-based websites, they have been paying this dividend for about 10 basically years, but increasing it, I'm not too sure. So they have increased it. If you look at Dividend Max, they've actually increased it basically here and there. So it's not consistent, but you get $1.42. This is the basically US version, but it looks like overvalued here because when you look at the 2.4 and then here 2.14 is basically the average was that. So it's slightly lower than that now. So it seems basically slightly overvalued here. And when it comes to PE, we're looking at about 16, which is basically lower than basically where it's been in the last 5 years. Now looking at the free earnings per share payout ratio, 35%, which is nice. Free cash flow per share is very low. Earnings per share is heading in the right direction. Same goes for free cash flow per share. Now, shares outstanding, they have diluted those shares again because AstraZeneca is one of the biggest companies out there. They acquire all these smaller businesses every single year. That could be one of the reasons why they have diluted these shares. So whenever they acquire companies, they actually use some of it they pay as a shares rather than just paying cash and so on. Total sales basically is heading in the right direction. Return on equity 16%, return on invested capital 15%, operating margin 23%, on free cash flow margin of 15%, which is nice. And then debt is very, very low, which is quite nice as well. Looking at Morningstar, 4 stars right now, 15% discounted, $78 per share right now. The company has a wide economic moat. And looking at basically more Yahoo Finance next year, about 13% increase in terms of the growth estimates for the EPS, and then next year basically every single year for the following 5 years is about 13% as well. And as you can see here, it is a buy heading towards a strong buy from these people here. So that's the 3 companies that I want to share with you guys. So I'm going to show you quickly how many shares of these companies that I own already. And of course, like I've always said to you guys, I need to max my ISA account, so I will be putting some of that money to these three companies. And of course, there are other companies that are still on my watch list that I need to add to, but I want to share with you guys these 3 because I'm gonna actually use a lot of that money just to add to these companies now. So AstraZeneca, there you go, 36 shares right now. I don't know where this came from, by the way. I think so one of you guys must have used my link there, so I'm gonna have to sell this bank whatever and then to give that money to charity, inshallah. The next one was Medtronic. There you go. So I am down as well for both companies, actually all 3 of them, and Public Storage as well. All 3 of them I'm still in the red, so for that reason I would like to add to them and bring my average down. This one, if I can get maybe to 40 shares, that would be brilliant. Maybe this one 25 shares, and this one maybe running it to 40 shares as well. See what happens, inshallah. So I've got a bit of news about the ISA account itself and what I'm going to do with this account here, and if I'm going to carry on with it, if I'm going to open a new account, I will let you guys know as soon as I have more information on that. I will share it with the Discord brothers and sisters on there first, and then I will share it with you guys towards the end of the month, inshallah, what I'm going to do. Anyway, I hope you're enjoying the content. If you are, please subscribe to the channel. help us by, of course, joining us on the Patreon account if you can. Have a wonderful day. Assalamu Alaikum.